All right, so Roger, you've been in these rooms. You've been in these rooms when the Fed's weighing what's coming up in the future. The Fed always says that it's data dependent, but it just has to be forward looking. We kind of get a sense of that the most tangible way in the summary of economic projections. If you were in this room, how would you look at the incoming policies of this administration, especially when the next Fed meeting is just about a week or so after the inauguration?
Well, look, a week or so after the inauguration, it's going to be much too early to start to bake in any formal view of the policy. What do we know right now? It's most likely that there will continue to be, tax cuts. I don't think they'll manage to cut government revenue as much as they want or government expenditures as much as they like. And so I do think their policies are likely to be more towards deficit spending for sure. Which could feed into rapid growth, but it could also feed into greater inflation. Very uncertain what's going to happen on tariffs, as you point out. They could go either way, and so I think it's too early to bake that in. And the expectations of mass deportations, I think, are probably somewhat overdone. We've already seen some changes around tone there when it comes to H-1B visas. So I think the only thing to expect right now is a little bit of wait and see. What an expectation, though, probably slightly higher inflationary pressures because of deficit spending likely to continue.
So, Roger, I've heard some people out and kind of putting out this kind of thesis, I guess you would say, that tariffs don't actually cause inflation. Scott Bessent, one of the people saying something similar, is that if you raise prices and raise tariffs on something, then people spend more money on that and they have less money to spend on other things, so that tariffs don't really start inflation. Do you agree with that? That's that idea, that thesis, whatever you want to call it?
Look, I think it's very uncertain. Tariffs will certainly be a one-time increase in prices, as Bessent has said, for some sectors, for sure. Then the question is, what's the follow-on? Will that lead to individuals demanding higher wages if they find that the things they're consuming are going to go up in price? And remember, by definition, tariffs are going to have to hit goods. They can't hit services. And that's one of the areas that has generally been deflationary. So I think we're likely to see a one-time increase in prices at least. It's going to be in the goods sector, might give a slightly more inflationary balance to the economy. The flip side that's really important is how does the rest of the world react, and do we see a ratchet up in tariffs around the world? And whenever that has occurred, we see a slowdown in growth. So I think tariffs are a bit of a wild card. Too early to say it's definitely not inflationary. Too early to say it's definitely not going to be contractionary. It depends very much on what's called second-order effects, and none of that's played out just yet.
All right. So coming up in January, on January 8th, we get the Fed minutes from the last meeting. And then on January 10th, we get a jobs report that seems to have a lot of weight on it. As we look ahead to that, what are you expecting from those minutes? And how do you see the Fed interpreting the jobs report, especially if it comes in line or better than expected and the job market shows strength?
Look, I think the minutes are going to show a very close call at that last meeting. We saw there was at least one dissent. Often when there's one formal dissent, there are a few others who perhaps were uncertain and on the fence. And so I think that was a close call meeting. And I therefore think the question of, what to do next will be very much, in abeyance, so to speak. Wait and see at that January meeting. I think they want greater clarity. Right now, there's a concern that inflation has been sticky. As Chair Powell said, the big surprise last year was that inflation didn't keep coming down. Labor markets seem to be in pretty good shape. And the economy appears to be growing roughly at trend. And so, just as you saw them say they expect fewer cuts next year, I think you'll hear more of that out of the first meeting. Wait and see, probably not going to move as quickly to reduce rates, and inflation looks like it's trending sideways, not continuing down. So very cautious message at the first meeting, reflecting what we heard at the end of the year.